Yeah, good morning, guys. Good morning. Kindly drop one in the chat if you can hear me. Good morning. Good morning, guys. Kindly drop one in the chat if you can hear me. Oh, great, 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 great. So, without wasting much of our time, let's dive right into today's analysis. And as always, good morning, everyone, and welcome to T Billion Forex Academy. If you're new here, my name is Timothy, aka T Billion, and this is our weekly live market analysis and trading session, where we break down the forex market step by step in a very practical and well-structured way. Okay, we hold this session every Monday and Wednesday by 9:00 a.m. West African time. Now, our primary focus is XAUUSD and GBPUSD, followed by other forex pairs you request in the chat. The goal of this session is to shape and sharpen your understanding of the smart money concepts, okay, which includes order block breaker blocks, market structure inducement and liquidities, as well as price action. Okay, how you can properly read market structure, identify key order block zone, as well as breaker block zone, and liquidity area, and most importantly, how you can apply this concept effectively in real market scenario. Okay, so whether you're a newbie trader, an intermediate trader, or a pro trader, stick with me as we follow a clear top-down analysis process. Okay, so before we delve into today's market analysis, let's look at what market has been doing since our last session. Let's look at how price reacted at our key order block zones and breaker block zones that we marked out in our previous session. Okay, so I'll head straight to the 1H time frame. Okay, so we marked this session in our last analysis and look at it. Of course, all conferences, aligns, and you cannot be 100% correct in trading, right? So this trade hit SL, right? So first and foremost, just a recap on the analysis that made us took this trade. Again, our directional bias was established to be bearish, right? And we got this break of structure to the downside, right? And of course, this is our inducement, and this is our POI, our order block zone. Price mitigated the order block zone and break past it, thereby invalidating the order block zone. And we took an SL on this trade. Okay. Similarly, this was called on the free signal Telegram channel, and again, all conferences aligned, but again, price we hit an SL on this trade as well. Okay. Now, if you understand how I trade, of course, these were profitable trades we took last week. So now, if you look at all these trades, this is a 1:14 risk to reward ratio, and this is just me trying to, you know, give you an heads up on how I trade basically, and how I stay profitable trading, right? And there's something you need to understand about trading. You cannot be right all the time, you know. So the profitability depends on how much profit you make when you're right and how much you lose when you're wrong, right? So look at these trades we took last week. This is a 1:14 risk to reward ratio. And this is a 1:13 risk to reward ratio. And this, of course, is a 1:10, so 1:9 risk to reward ratio. And these are massive RRs, right? These are massive RR. You can do the maths, right? So when you, of course, look at the SL, these are extremely very tight SL. So imagine you risking $100, right? And you're making as much as $1,400 on this trade. And for this, you're risking $100 and you're making as much as $1,300. And these, you're risking $100 and you're making as much as as much as $900 on this trade. Now think about it. Again, on this trade, you're risking $100. Of course, you made a loss on this. You lost $100. By the time you accumulate the whole profit you've made out of this trade setup, right, that hits TP, you would agree with me that $100 loss on this trade and this, making a total of $200 loss, is almost nothing, right, is almost nothing, is negligible. So that is how you trade. When you are right, you should hit it big, right? And when you're wrong, your losses should be very, very minimal, right? So you keep your losses very lean and your profits very, very fast, right? So that is how you trade basically. Now, with that out of the way, let's dive into today's market analysis. So on gold, quickly on our last what's it called analysis. Since our last analysis, gold is yet to tap into our order block zone right here. Okay, price is there to tap into our order block zone, which is this, right? So we're still waiting patiently for this, to play out. Yeah, so we're still waiting patiently for this to play out. So until then, we'll keep waiting, because as you can see, price has been literally ranging, since our last session. Patience, of course, is what differentiates a gambler from an actual trader, right? Or from a pro trader, basically. So you wait for price to come to you. Don't chase price. All right, so let's head to today's market analysis. So a quick one on gold. So for gold, we are still maintaining our bullish bias. And as we did in our last session, we marked out this order block zone. We're basically waiting for price to tap into this order block zone so we can take our trade accordingly, right? So this is our order block right here. This. Okay, sorry, our breaker block, basically, not another block. This is a breaker block. So we are basically waiting for price to tap into it. Here's our inducement. This is our breaker block. So as soon as price tap into our breaker block, then we have our pending what's it called, buy limit order at this position. As soon as price tap in, we get tapped into the trade and we ride this trade all the way to to this price level. This is where we are taking our TP, right? So again, we are still very much bullish in terms of the higher time frame confluence. We're still bullish on gold, right? Again, we've already established our directional bias to be bullish. So we remain bullish until this low is taken out. This, right, until this low is taken out. Let's go to the 4H time frame for a more clearer price action. So we remain bullish until this low is taken out. This right here. Okay. All right. So that is that on gold. Again, let's wait patiently for price to tap into this other block zone before we take our trade. Again, you can set a pending buy limit order right here and wait for price to tap into the zone for a trade to be executed. Okay, so on GBPUSD, today's market analysis, as you already know, we've established our directional bias on GBPUSD to be bearish, right? And of course, once you've established your directional bias, what you want to do basically is to take only opportunities in the direction of, of the trend. Obviously, gold, GBPUSD has been bearish on the daily time frame, and so let's mark out our point of interest on the daily time frame. As you can see, we got a break of structure right here, and we got another break of structure right here, right? And of course, this we have a breaker block right here. There's our breaker block right here. So we got this breaker block right here, and that is where price is currently, price is currently at this breaker block right here. Okay. And as an additional confluence, you can see the breaker block aligns with this bearish trend line, this, right? That is an additional confluence. Of course, it's not like the trading trend line, but of course, when your POI, aligns with the trend line, it's an additional confluence that it increases the probability of that POI, basically. So we have this breaker block right here. Now we are going to drill down to the 4H time frame to further refine the breaker block. As you can see, price is already reacting at that breaker block. So on the 4H, I'll refine this breaker block to this candle right here, this one right here, this candle right here. Okay, this, and let me adjust this. All right, so we have this. Go down to 1H time frame, and this is my entry time frame, as you know. Now, I don't take my entries at on the daily time frame or the 4H time frame. I just use those time frames to establish my directional bias as well as mark out my POI. Okay. Now on what's it called, on the 1H time frame, what we want to do here basically is we want to identify, you know, we want to look out for a reversal concept, which is basically our market shift, and an inducement and our POI, right? So looking at this, price has been creating a series of higher highs, low, high, low, then high, right? Let me zoom in so you can see my chart properly. All right, so we got this. Now, we'll basically wait for price to, take out this, okay, these two lows are actually the same. So we'll wait for price to take out this low, creating what we call a market shift, right? So wait for this low, basically. Let me take this guy out. So once we have this market shift, once price gives us this market shift, which we're currently, I think, is about to do that, right? Then we'll basically wait for our inducement. We'll wait for inducement. So this is what I'm expecting price to do, basically. This is what I'm expecting price to do. Then we either react at this POI, depending on the level of the retracements we got, okay, or we react at this, what's it called, order block zone. So please take notes. This is it. So we either react right here, take our entry right here, this is our supply order block zone. So that's our breaker block. So this is our breaker block right here. And this is our order block right here. Okay, so this is what I'm expecting price to do, basically. Until price do this, I'm not taking this trade. Okay. I'm not taking this trade until price do this. So this will be our inducement. This will be our inducement. Then this will be our breaker block. And this is our order block. All right, so I'm going to set my position tool at this price level right here. Then my entry will be right, my SL will be right slightly above the, sorry, yeah. So my SL will be slightly above the breaker block. And of course, I'm targeting this much as my take profit level. And this is a 1:13 risk to reward ratio. And this is for our breaker block. This is for our breaker block. Now, if for any reason price invalidated this breaker block, then we'll wait for price at this order block zone right here. Okay, right, yeah, take our entry right here. So please, not until price, do this, we're not taking this trade just yet. Okay, now again, this is a reversal concept, right? If for any reason price didn't give us the expected what's it called, price action, it's simple. We are going to join the price using a continuation you know pattern. Again, if for any reason this reversal pattern was not printed, it's easy. We're going to join the bearish trend using a continuation pattern. Do not chase price again, as I've always said. Wait for price to come to you, right? You react to what the market, to the price action the market is printing, basically. Okay, so this is what I'm anticipating. And if price did not do this, of course, I'm not taking this trade. I'll rather wait for a continuation pattern. All right, so that's why I encourage you, I recommend you join the free signal Telegram channel, because of course, as soon as this plays out, I'll drop the signal right there on the free signal Telegram channel. So if you're not there, do well to join the free signal Telegram channel. All right, so this is it. This is my bias and analysis. I better put my outlook on GBP USD for today. And for gold, as mentioned previously, we are still waiting for price to tap into our zone so we can, take our trades accordingly. All right, so we're waiting for this. Okay, so that is that on GBP USD and gold for today. Please, if you have any question regarding this, kindly drop your questions in the comments section. Okay, I'll do well to go through the comments and attend to all questions. Of course, for those on the private WhatsApp group, you can drop your questions right there in the group, and I'll attend to them as soon as possible. Okay, so that is my bias on gold and GBP USD today. So to wrap this up for today, our key lesson is structure. So first and foremost, your directional bias, that is key. So whichever concept or whichever way you establish your directional bias, please do so. That's the key, that's one of the key steps to trading SMC. No matter how valid your order block or your breaker block zones are, if they're not aligned with the higher time frame directional bias, or they're not aligned with the prevailing trend, those zones will be invalidated. And that is why it is recommended you take trades in the direction of the prevailing trend. Okay, so please, so first thing, lessons for today, your directional bias, then market structure, your key order block and breaker block zones, and finally your entries, right? So please, if this session has added value to you, don't forget to like the stream, subscribe to this channel, and turn on your notifications so you never get to miss our live session. We'll be back again on Monday, 9:00 a.m. Until then, trade smart, protect your capital, and I'll see you in the next session. Meanwhile, guys, stay active on the Free Signal Telegram channel. So I'll be dropping high probability setup on the channel. Peace out, guys. Cheers.